Check 1, 2. Hey, what's going on, everyone? Welcome back to Dano Crypto. On this channel, we show you guys how to make simple, effective, and easy moves in the cryptocurrency ecosystems. So happy Wednesday. Happy middle of the week. We got Bitcoin moving. We got the alts moving. We have some good sentiment in the market. So we're just going to cover the markets today. We're going to cover the charts. We're going to look at what's happening right now and see if we can keep the momentum. Bitcoin's looking like it is trudging back up to the all-time high. And we're going to look at this kind of on the short-term time frames here, but also look at it on the weekly and see how we're kind of holding above the EMA ribbon and also holding above the EMA ribbon, also pretty close on the 4-hour here, which is also a good sign. Getting a nice little pump here. We basically had a bear trap happen here. We had some consolidation down into 105,000. This was a major liquidation levels that we were looking at. Bitcoin was high likely to liquidate the trades down in this level, liquidate the long trades that were up a little too heavy on the leverage, and also with the alts. So the market makers, aka Binance, and the ones that are wish-washing the ETH and the Bitcoin and the Sol, to the three highest traded tokens right now in terms of volume on the daily. You can see did this around, kind of in the middle of the night, and then they brought it right back up into these levels to liquidate the shorts. And so it was a nice little rinse and repeat for the exchanges here, and for the traders that were able to take advantage of this. Congratulations, you definitely made out pretty well with this level here. Now, this was a key level to watch because a couple things could have happened. We could have had another breakdown here into possible 102,000, but really now we're seeing some pretty decent buy pressure coming in. We have volume, and the next level that we're trying to eye here is the fib extension of is that 114. The 114 is coming from, this is actually the level that we were looking at, was the first 618, and we're testing coming into the 786, which is the 109,000, which was some previous resistance on this level here. You can see was key resistance at 109, 108. So if we break this, then the next level we'd be eyeing is a new all-time high. So, and with that level being marked, I think a good resistance point would be just basically in a price discovery mode of 114. And so the dominance here in Bitcoin is pretty heavy still. So if we look at the dominance and then total market cap, the dominance was trading up into 65%, and now we're seeing it still steady at 65. Looks like it could even go up even more. And you can see the total cryptocurrency market cap on the 4-hour is getting up to back close to its all-time highs. If we look at the all-time highs of the total cryptocurrency market cap, we've got pretty close to going over $4 trillion. But if you look at the weekly chart here of the total cryptocurrency market cap, you can see that we are breaking out of this pattern, this cup and handle pattern, and we'll show you some of the other cup and handle patterns that have been happening on some of the altcoins, and two of them being Aave and the other one being Solana. So I'll show you guys that really quick. Show you that Aave has the potential of breaking out of this cup and handle pattern, and And just to mention, the reason why I mentioned Aave is because Aave has been the institutional pick for staking with ETH and stable coins. And as you can see here in the World Liberty Financial Wallet, you can see we have Aave ETH, wrapped staked ETH. We have the Aave ETH USDC, and we have Aave ETH wrapped BTC. And they're staking all of this, and then they have the Aave ETH USDT. As you can see, this particular protocol here and wallet is staking almost all of its stable coins and its ETH. So they're definitely in it for the long haul. You can see the ETH here that they're not staking is only like 21 ETH. So liquid ETH, and all this is liquid staking as well. You know, it's you can with Aave, a lot of this can be locked up for a certain period of time, but then also it's like I could be also liquid as well, but they could have this locked up for a specific amount of time as well. But it just shows some strength of long-term holding for Ethereum. Another thing to show strength. And what's going on, everyone? Not sure who's in here. I started a little late, so I do apologize. But you can see here on the far side, or far side investors. If you guys want the link to this, you can check it out, and you can kind of follow this and see what's happening with Bitcoin and ETH ETFs. The ETH ETF has been seeing some inflows over the past 6-7 days. You can see right here on July 1st, we had, it was only BlackRock that was buying. We had Fidelity actually selling, but they were buying over the past week, but then they sold a little bit. But you can see it's starting to come in a little bit more. So I think what's going to happen, we've talked about this, is that the ETH ETF will start to potentially look like the Bitcoin ETF, where getting, 100 mil, 200, 300, 400, getting that substantial amount of volume and liquidity coming into that. And also we have the ETH staking that is still the SEC is still waiting to approve this. It's been delayed, but once they approve it, which I think they will, then that is going to give more buying pressure into ETH. Emmanuel's asking, can our Pepe bags finally pump? I don't know. I'm kind of now more on the side that like we still have to just be patient. We have to know that like Bitcoin is just going to probably still dominate. Like it's going to just dominate right now. Like the dominance is still so high, and I think we're going to see Bitcoin all-time highs here again before we see any other type of ETH all-time high or any altcoins breaking any all-time highs. We're going to see Bitcoin probably breaking the all-time highs first. And I mean, look, it's definitely apparent right now. Yeah. So Pepe technically has already pumped. Market cap says it's pumped already. Yeah, Headband kind of makes a good point. I think and I'm being honest here, like I think Pepe, in terms of the trend, if you look at the trend, and if we just touch up to the trend line again, then we would be at a $40 billion market cap. So right now, so from the prices that we're sitting at right now, and we get up to, back up to just at least trade back up to the trend line here, then we would be at a 470% move to the upside, and the market cap would be around $40 billion. So right now, Pepe is sitting in the number 25 spot, or number 29th spot, at $4 billion market cap. So now all-time high, I think it got to $10 billion. billion? 11 billion. Okay, so yeah, so $11 billion market cap at its all-time high. So I think 20 to $40 billion market cap from where we're at right now is pretty conservative, case. But the things that I've been paying attention to in terms of like what can you buy that's not already in the billions, what can you buy as a meme coin or an altcoin that's not already in the billions? Ticker Bitcoin was one of those that has that bottomed out chart, and another one was Wojak. Wojak definitely had a very similar chart to the ticker, and this just shows me that like during ETH season, coins like this that had like good liquidity's locked, and it's still pretty undervalued, I would say. And a solid meme too. It's like you can't really recreate a meme like Wojak, and the similar thing with Ticker Bitcoin or like Pepe. There's just memes that people try and copy or try and reproduce, but it's hard to, because this is just kind of like the just original content. So I'm more on the side of paying attention to the ones that are at its bottom. I mean, you look at this one, you look at the ticker. And these are 2-year-old memes, established memes that have had, all during points of euphoria, hit that trend line, and it kind of just represents the sentiment of the market and the retail market, and also the meme traders, kind of coming in and out of the space, and money kind of just being redistributed around, especially to the people that have just stayed in crypto and they're just here. We're all just trading our money back and forth between each other, and then also leveraging in a way to the exchanges. So we give it back to each other, and then we also give it back to the exchanges. And, it's rare that, you actually become the person that actually off-ramps into stables or cash, because we are RETARD, ED, in big caps. But yeah, if you want to find a bottomed out chart, just look for something like this. Like that would be the key points of where you can give yourself a, high risk, high reward ratio of buying something at the bottom and getting hopefully a better return than buying something that's already valued in the billions and you're possibly buying close to what the top could be. So conservative case scenario for ticker Bitcoin would be that we do a 600% move to the upside and just at least get to like a $500 million market cap. I mean, we've at least been able to get to a 373. The first pump was, $188 million market cap. Then that second one got to 257. And then the third pump was at 367. And I think we could at least get to 500, which would put us into a price point of be like 50 cents, around like 40, between 40 and 50 cents. So we'll see. But those are the two particular coins in terms of memes that I'm looking at that have a bottomed out chart that you would be buying, quote, the bottom, and then being able to sell when it's at the top. So buy low, sell high. It's the name of the game. Buy low, sell high, but then also we do have to hodl. That's where the most money has been made, is the DCAing, dollar cost averaging, and just hodling, which is some of the hardest things to do in crypto because it is one of the biggest mind games in all of investing is crypto. We've been in it now long enough to know that have succumbed and have been tricked, fooled, all of the things. I've made all the mistakes, have done every single thing that you just don't want to do in crypto. And so we've learned over time that the best thing that you can do is focus on a small amount of coins and research those, learn about those, test out and use them, and then figure out if that's where big institutional money is going to be going. And even if it's just like a speculative play, There has to be reasonings behind it besides that you saw it somewhere or someone was talking about it. It has to have a little bit more depth. But then also you have to be willing to hold these things through the treacherous points, through the points to where you feel like you're going to quit, and it's going to be hard. But then also you have to realize that even out of all of this, you could do everything, quote, right, and your coin can still go to zero. So there's massive risk in this game, but at the same time, there's massive risk not investing at all and just holding your money somewhere and not having any exposure. So that's the giant mind F that is investing in general, is because at the end of the day, you are more at risk not taking a chance or not taking a risk. It's just, it doesn't matter what it is. Like, everything is a risk. Even you going in and investing your money and you putting in $5,000 into crypto, you are not guaranteed to make a double, triple, quadruple, or a 4x or a 5x. You should just know that if you put money into anything, you need to be prepared to lose it all. That's that term of don't invest what you aren't willing to lose and what you can't afford to lose, because they say this because you're not guaranteed a return. Just because you invest in something doesn't mean you are guaranteed that you are going to make a profit. So you just have to have that type of mindset going into this, because that's the risk. But the reward is that you could potentially get a return on your investment. And so what's the risk to reward ratio of not investing at all? Well, you're eliminating the risk, but then there's no reward. So then there is no reward, but then there is still risk, because debasement of the fiat currency, things are getting more expensive. So your purchasing power of your dollar is going down. So if you didn't invest the entire year and you make a $50,000 salary, and we know that inflation has been going up and things have been increasing at almost 10%, 15, 20%. Realistically, it's probably 20%. That's why we use the 20% figure, because if things have gone up, quadruple, triple the price, then your purchasing power and the amount of things that you can actually do with your $50,000 is going to decrease actually through the year by 10% or 15%. Let's just call it 20%. And then extend that out the next 2 years or 3 years, it gets even worse. And now the money that you didn't invest is worth 20% less each year. So these past 4 years have shown us that if you made a $50,000 to $60,000 salary and you didn't invest any of it, you have now lost 20%, regardless if you invested it or not. That's what's such a mind F about deciding when you're going to now put your money to work and not have it just get devalued over time, because that's what has been happening. So at a point, you have to get to an equilibrium, which what I'm trying to get to now is to have no debt, so you're not paying anyone interest, because that's also taking your money too. So now think about it this way. If you have debt and you're paying credit cards, now you're paying out 40%, because now you're losing you're losing value of your money, and you have to pay 25, 30% on credit cards, or you're paying 10% or whatever it is on some loan or personal, whatever it may be. And we all know that when you pay those loans, you pay the debt, what gets paid first? And what more of your money actually goes to the interest than it does the principal. So when you break this all down, everything is a risk. But when I look at that, I go, wow, it's way more risky to be not paying off your debt, to be like not paying off your debt and then just earning money and working. And then maybe trying to put him to just paying your bills. That's what gets you stuck in this really like crazy cycle of never getting out of the damn hole. You're just on the hamster wheel. So at a point, you have to make a choice and say, okay, what's the plan? Get out of debt. Don't owe anyone any money, okay? That is the way you are enslaved, is by debt. And so then once you have your debts paid, you figure out your money and your budget, and you figure out how much money you actually need to pay all of your bills, your subscriptions, all that stuff. Then once you figure out that number, you need to figure out how much you make. How much are you pulling in? Okay? And then you're going to subtract that number from your expenses, and then what is left over? That is where you're going to find that sweet number of what you can actually invest and where you can put that money, because obviously all the other money is accounted for. You have to pay rent, you have to pay your car insurance, your cell phone bill, you need internet, right? Unless you're going to McDonald's to get free Wi-Fi, but you're paying your bills. If you have kids, you're paying for all their summer school stuff. You need to figure out how you're paying for their schooling, you're paying for all this stuff. You got to figure out what your budget is. These are all like basic things that actually not a lot of people are doing. And there is no wonder that we are at a massive credit card deficit and deficit in general of the American people, that we're operating on debt in a hope and a prayer that we'll make it and have enough money to the next month because people are in so much debt. And so this is what we have to figure out first. Like that's the priority number one. What do you actually make? What's your expenses? Do you have debt? And what's your plan and trajectory to pay it off? Because if you have no plan to pay it off, guess what? You're a slave. Newsflash, you're a slave. And the more you start to frame it like that, the quicker you will break that chain and know that you don't want to be a slave. No one wants to be a slave. So that's how you have to start thinking about all of this before you even begin to invest. I've had to learn this the hard way. I've learned everything the damn hard way. I don't know why, but it's just how it's been recently. And so because of this, I'm going to tell you how it really is and how most people are operating right now. It's easy when you come in here and look at crypto and you see people, you see the screenshots and you see all this stuff. But the reality is that 95% of people are feeling and operating how I'm explaining right now. By the skin of their freaking teeth, they're able to get to the next month. So if that is you, then there is a massive planning that needs to come in, and it's time to lock in and figure out what the plan is. So then you can invest in these assets and you can invest. Because I've had to make the choice of, do I keep trying to invest, or do I clear up the baggage and the stuff that will actually keep you poor over time? And it's debt. You don't want to owe anyone any money. And it's also your expenses. You have to live at your means or even below your means. For as long as you can freaking stand it, you have to do that, because if you get used to being comfortable in the things that you like and that the way you want to live, then you are going to put yourself in a bad situation, and you're going to be at a point where you're like, wow, I actually make good money, but it's all going out to these expenses. And it's a real messed up thing to be making good money and you don't even get to feel it or see it or even experience the money because it just goes to expenses. It sucks. It's not a good feeling. So, all right, rant over. The rant is over. And really, if you notice, I'm talking to myself. I mainly am talking to myself. It's a conversation that I hope I'll go back and I'll listen to, listen to myself. But that's just the reality. It really is a reality for a lot of people, is that they're trying to they're having to make a choice. It's like, do I try and get exposure into these markets and trying to invest, or do I try and pay these debts off? Like, because guess what? A lot of people are in debt. They got college debt, credit card debt. They were operating off of credit cards and all this stuff. Some people even probably tried to take equity out of their house to do a bunch of stuff, and then they really screwed themselves up, because then now their property value has gone down and they took equity out of the house, and then now they have 2 loans. It's like, oh my God. See, the Fed doesn't, they're so detached from that reality for Americans that when I hear Jerome Powell talk about how the economy is, I'm like, bro, you are very detached from what's actually happening to just the, under middle class, kind of lower middle class, and also the poor people. It's wild. But all the while, Bitcoin's pumping. Stonks are pumping. Tokenized stocks is the name of the game now. Wall Street is on chain, and there's no turning back. Wall Street's on chain. Wall Street is in crypto, and they're never leaving. So welcome to the manipulation. Your goal is to hopefully be on the right side of the manipulation, and then you can survive. That's the name of the game. All right. Bitcoin sitting at $108,552. What alts are doing well in terms of percentage gains? Ponky up 10%. We got Sonic, the S token, up 7%. Let's see what else was doing good. Brett up 7%. Super up 8%. Yeah, a lot of stuff got a nice little pump. It was a massive trap here that happened with a lot of these tokens. and I got kind of rocked on the trap as well. Got rocked on the trap. But yeah, some of these alts are, doing pretty good today. Not too bad. All right. Checking this stuff is being so weird. All right, so something's happening where these old Bitcoin wallets are starting to take profits, but I guess it's a good thing, because Bitcoin investors aged 3 to 5 years are once again leading the profit taking. Like these old wallets are taking profits, but what it's doing is redistributing the coins out to new people. So the newer investors, it's like someone has to sell the coins, for us to be able to buy them at these prices. But then at the same time, like, not everyone's going to be doing this. They're still going to be long-term holders, but it's really, I guess it's, whales are redistributing, the coins. So the firm disclosed that wallets holding more than 1,000 BTC have been steadily reducing their balances. This indicates that although institutional money is flowing into Bitcoin, so they're buying it, whales are still offloading their holdings. But it says it's worth to mention that Centaura sees the redistribution by whales as a sign of a maturing market rather than weakness, because it says older whale coins being dispersed could become a dynamic that would strengthen Bitcoin's long-term potential. So I guess that's just kind of how the market has to do a redistribution process with people that are holding these coins. The Bitcoin's going to get to 120. I mean, these wallets holding all out of that old Bitcoin probably going to take some profits. I mean, it's hard not to when you see your balance like that. Most likely going to take some profits into fiat, and then that redistributes some of that old supply into some new, unsuspecting people. Because there is the term, it's like Bitcoin is just like convince the next guy to buy it at a higher price than you did, and just keep doing that until you keep convincing people to buy it. But Bitcoin's pumping right now. I'm in no trades. I got destroyed over the past 2 days, and so there's no liquidity left to be in any trades. And so yeah, I am not getting any exposure into any of these moves right now, and probably won't for the rest of the week because it's already too late. We'll probably most likely break all-time high, and it's potential that we could break it actually this week. We could crush through this 108 resistance here and start to get to this next level and kind of start pinching up. Especially with you can see the RSI still has some room to go. But yeah, I hope you guys are making money. I hope you're making money. I hope you're doing good. I hope you're doing well. My advice is do less trading, pay off your bills, pay your debts, and then have a DCA strategy and get into some things that are tax sheltered, so you don't have to worry about capital gains tax too much, and just start earning some dividend and yield if you can with a strategic portfolio setup. Maybe even have some stables earning some yield. See about that Solana staking on Robinhood. I don't know, maybe you got a bunch of extra SOL. You could start staking that on Robinhood. Pretty cool. You can also start buying these stocks that are pumping, these tokenized stocks. Now we can do NASDAQ on chain with all this bullish stuff with NASDAQ on chain. We got these particular coin or particular stocks pumping. Not too bad. But all right. Hope you guys have a good rest of the day. We will see you tomorrow. Peace out.